Welcome to TradeNBI.com. This is Jonas Report. It's for the 30th of September, as we're going to end it out at the beginning of the week. So there should be some more fireworks. As you can see, the little tails of gold right here, and that's just because we've been in this rising gold pattern. However, we're getting close to that meeting of the Azure, and that's usually the little pivot point that happens when you get the conversion of the algo there. And at this particular point, we're still in a generally minor bearish run here. We didn't have the steel move above cyan, kept it slightly below, but falling cyan at the same time. They're kind of tracking pretty darn close, so it wouldn't take much. We still have green slightly above a falling red, so hardly excitement time. Though at the beginning of the week, by midweek or so, we'll be ready for new fund influx. So if things haven't broken down, be a good opportunity for them at that point to make the next move back to the upside. The real question is how much paralysis the political situation causes, and whether or not there's a belief, and this is it, it's all about psychology, whether there's a belief of risk on or risk off, if there's going to be continued political turmoil. Some might always think that that's a bad thing, but when Congress is paralyzed, it means they're not doing anything to cause business problems, and that sometimes can be a net positive. So we'll see how it plays out. We're going to see it here with the readings. These are still generally weak. There's nothing super positive about this. We can get a turnaround and a shakeout. That would be what you would look for. We haven't dipped below the red line yet, but we're still not in a super strong spot. Nasdaq's even worse. It dipped all the way to the 50% line, and you can see clear separation to the downside and a dip below the red line. So we've been talking about this Nasdaq weakness being more exacerbated than on the S&P, and it's showing itself out clearly with the way the readings were looking. There's been far clearer separation for all of them, and certainly when we play it intraday, there's plenty of swing action, so it provides all sorts of opportunities from an intraday setup. And of course, the euro breaking into new lows, rebounded a little bit back to the zero line, but still with a dip below the red line and no change. I mean, you can see that we've been in this continuation, and this is how we talk about how pivotal that failure to get a reset. I mean, this goes back all the way to, well, the beginning of the breakdown when we were at 113 range, and really hasn't changed. Now, fine, you can get buy configuration pops within there, but you understand that they're very short-lived, and we'll talk about more of that on the 5K chart that we look at, because it becomes rather clear and easy for us to identify, and it just becomes a question of whether you like playing a long version versus a shorter interim play. But certainly even some of the buy signals that we get, we know there's going to be just a short-lived pop that's going to turn around. From an oil standpoint, below 50%, it's just been fading ever since the attack on the Saudi refinery, and you still don't hear much about that anymore because there's been a huge drive in excess reserves. Now, that bodes a question of whether or not that's just a complete shutdown in growth aspects and there just isn't any activity. That's really the question, and that is going to be the driving force going in to the beginning of the new year, and whether or not this push towards a recession is going to be, the narrative that, everyone is going to be going for going into an election year. Though it's something I always point out to people. It doesn't happen but every, 4 years for the big one. But there's usually a paralysis as that starts up and people just hold. Particularly if there's uncertainty about it. If it seems like it's a pretty given situation, then things continue as normal. But when there's a degree of uncertainty, usually people just freeze. And that freeze usually has a negative impact on things, particularly on spending and that. So from a gold standpoint, a little weak, and I would think that could even express some more weakness. It's been in this trailing spot once the steel came over here, crossed below. That was the first trigger for a little bit more of a decline, and now we have green falling a little bit more. So if that dips towards the 50% under the current configuration, I would expect that to break and fall down there a little bit. Is it anything like a crisis? No. So here we have the intraday setup. So early on, we had the nice dips that, reinstituted positive momentum with rising GLC reds, and that really elevated things. But then we would get GLC spreads and pretty strong breakdowns with the red below zero. And that led to nice cascade moves over. We ended up with this nice orange, and this is always an interesting one because I wanted to point these out, the depiction between this type of an orange versus this type of orange. And the primary factor that we can look at when we're describing these is, well, this one, again, started with the dip below the red line, then the cross of steel moving above as we came into the lower portion. But really what you get is you had a previous pivot right here of red, and it happened to be right at, what, negative 15 range right here. And the red pops above it while you're not above the negative 13.5, because that can continue to give you a little bit. And so this straight up progression, and obviously green overtaking, that gives you a strong momentum move. And then, doesn't always happen, but in this particular case, DOC spread happened early on within the rising shakeout, but then as soon as that rolled over, you had red below the zero line, which from a broader construct is one of these where you have lower peak, and you didn't even make it to the similar high, and that led to the next dip down. So at this point, we did have a reset coming along nicely with that, and produces stronger buy configuration later on, because even though you had this strong move here, you didn't have the yellow crossing over. You did have green move above, which kind of like, but you're so far under the negative 13.5. By the time you get over it, you'll notice you don't have one of those secondary pivots like this one. It's just a single move. Sometimes these can carry forward. I usually look for the green over cyan, and you can certainly take that from alongside. It just doesn't have a long success unless you get that secondary pivot, which comes a little later, and that's where you see with these X2s and the P2 that showed up. And it did pop, because we ended up with cyan under there, but reverted to, and oftentimes what will happen with this, you'll get the pop, positive extreme, you refill it, and then it can give you a positive move going back, but in this case, it was just the opposite. Same rollover at the zero red line, DOC spread. With the reset, the interesting thing about it is you never got a steel crossover, and that's usually super bearish going in there. By the time it did cross over, it was all the way over here. You still have falling red as well as green underneath the red when that's taking place. And so you begin this long string now where you're in a negative, what I call long short, interesting terminology to use that, but it's like a bigger short in the sense that without that steel reset that took place back over here, once it was negated with the dip right underneath at this particular point, you're still within that configuration. Now you can get little pops that will come through, but you know from a broad standpoint you're still in a broad weakness. And so when this orange comes in, it's a complete different setup because it pops in exactly at the point where you've already got a green rejection with cyan leading. So they met, rejected. This comes in and just lets me know that, hey, I can short these opportunities until I'm getting little pops into it. And sure enough, that breaks down and actually takes us beautifully right to the 2952 previous algo level. And as soon as it broke that, there was a little bit of carry through, but it brought right back up to it. And again, here you have the difference where we've dipped down strong, and boom, you get green moves over the cyan, and the cyan rejects primarily. You get a little concerned when it happens right here because, again, you still don't have that reset. So following this, I'm a little bit more careful using the ABM, and I'm really like stay tight with it because these tend to then pop up with a failure signal. And even though this one did end up with the DOC spread right about here, we had dipped below the red line, and so you had to watch for turnaround setups, and sure enough, it stayed with it because it never violated close below the ABM. And so that's where that helps out because you can see that you stayed with that the whole way through, and it's still within that configuration because you have cyan deep under red. So this is it becomes an interesting one when you're looking at the propensity of turnaround moves versus not so strong, and definitely having that green crossover makes all the difference. The blue started with this original setup right here, but it takes a little bit of time before you get the crossover of the yellow over the magenta on the shakeout, which happens right on this bar right before this one. And in this particular case, you still had decaying gold as well as azure and blue. And then it evens out, and then right at the algo too. So that became the new support with the rising DOC red breaking above the negative 13.5. That becomes your good target range. And so that's just something I want you to pay attention to because it really becomes powerful. It's something that we note on the 50K charts as well. Proves to be very effective. And this is part of the adjustments I'm making in the new programming, which looks at a configuration of a broad short where we don't have that steel reset, because it literally stays, this extended time all the way until you get to right here. So it becomes effective if you're looking at it from a broad short standpoint. Now, in this particular case, that turnaround is going to be about equal to where this original short is, but when you're looking at it from the very first range and then even the second one, by the time you get to cross right here, you get this next dip. So you're able to say, okay, well, from that 71 level, you pretty much had the dip before the turnaround, which took place down here. So even if you were trying to follow it from a broad sense and not look for the lows, but I think in some of these cases, when we get a situation like this, you know that you can cover at that particular point very successfully and do quite well from an intraday trading standpoint. So keep that one in mind. We'll be sending out the renewals for the indicators, and you'll be all set, because Monday the 30th, that means by Tuesday, you want to have everything ready and set to go so that you'll be all set for the new month. And we expect October to be just a wild excursion. I think that it's going to be pretty dynamic, and I always love it when fear and that kind of thing pops up, because that's one of those where opportunity becomes fascinating, because if you're on the right side of the moves, they're dramatic, and they we've had months like that just can produce years worth of returns in a few days. It's amazing. So that's the long and short of it for now, but I think it's going to get exciting. So be ready. As always, though, trade well. We'll talk to you later.